shirt, but it really is a new day. Don't judge. What's going on today? Well, we just had our consumer price index numbers come out. That's our inflation numbers. I was hoping to get this video out prior to that, but got sidetracked. My son's school starts this morning and a whole new schedule to get into. Super proud of him going into 7th grade, which is middle school here in Texas, at least at our school. So anyway, not to go off on a tangent, what's going on for the day? CPI numbers came out. We got to learn about how much less our dollar is worth as of this morning, which is always a boost to the stock market. Stock market's a hedge against inflation. So when you have inflation, typically you're going to see a rally. Now, of course, there's other things that play into that. There's absolutely no absolutes in trading. But, we certainly have seen a push in off trading hours. We'll see what happens once the actual regular trading hours begin here shortly, really about 45 minutes from now. But let's go ahead and pop over to our charts and have a look at what's going on, what we're looking at, what happened yesterday, so on and so forth. So let's jump right in here. Yesterday, we'll always start with the S&P on the left side, go to crude, go to gold. We identified some key areas yesterday that we were watching. We talked about this channel that the S&P has been in for quite a while. We've seen kind of a top around 44.30, a bottom around 44.15. We said yesterday if it breaks 44.30, watch that break. And then, if it moves five points, move your stop loss to break even, or a little better than break even, to cover your cost on that trade. It moved more than 5, so it would have been a break even trade here yesterday. Same level applied to this morning. Of course, I didn't get the video out in time, so it's irrelevant at this point. So what we're looking at for the day is long trades. We're still in a long bias on the 4-hour. We're in a long bias in the 30-minute as well. So we want to see long trading opportunities here. And what we'd be watching for is a pullback off of this. We'd like to see the market start pulling back a little bit, making lower highs and lower lows. And then if the market snaps back in the direction of its current trend, or its current bias, then we'll play that long off the top of a previously closed lower high. Crude, we're in a mixed bias. Actually, no, we're not. It just flipped over on us. We were earlier. Oh, no, it hasn't flipped yet. Sorry, I'm getting lines mixed up here. We are in a mixed bias still right now on crude. We've got long bias on the 30-minute, short bias on the 4-hour. So on crude, we're not going to do anything. We've got a big X right here on crude. We're not going to worry about crude. And on gold, we're in a short bias. So 4 hours short, 30 minutes short. We're looking for short trading opportunities. Of course, we did identify yesterday that we have, again, pretty tight channel that gold's been sitting in with a top around 1740, bottom around 1725. And, we'll wait and see what happens there. Yesterday, we talked about playing a break of this channel. Yesterday, again, same exact process. If it broke it, we're looking for it to go 5 points. If it gets 5 points, we'll move it to break even or a little better in order to cover our trade costs on that. It moved that 5 points, 25 down to did it hit it? I thought it hit the 5 points. It didn't yesterday. Oh yeah, it did. What am I thinking? It moved 5 points, so we'd have covered that trade. It didn't get to the 10, which is where I was looking for a profit point, 2x of our initial risk. Covered the 5 points, so, break even trade basically here on gold. Again, watching that top channel. News came out. It's irrelevant at this point because I didn't get the video out prior to news. So, here we sit. We'll see what happens as we get into the news session. But in the news session, we have a short bias once it gets going. And we'll be looking for, these higher lows and higher highs, and then we would play a break back short in the direction of that current market trend if it does snap back in that direction. We'll see what it brings. Inflation, we should see gold continue to rise here, but again, fundamentally, as I've said before, fundamentals will drive, well, at least for me, it'll drive you batty because, the markets can be irrational for longer than you can be solvent. as Mr. Keynes so wisely said. So we're not going to try to second guess anything or front run anything. We're going to do things based on quantifiable reasons for why we're in or out of a trade. So why we're in the market or why we're not in the market should have a quantifiable reason behind it. When something gets in a really tight channel, it's not going to stay in that channel forever. It's going to eventually break out. We don't know what direction it's going to break, but we know it's going to break. It absolutely is. That's an absolute. It won't stay flat forever. It's going to move. We don't know when, and we don't know what direction, and anyone that tells you that they do is lying to you because it's a guess, right? But you can play that, and you can look for, quantifiable things to occur. Usually some sort of a market catalyst is what causes the thing to finally break out of that channel. Today we had a catalyst this morning that has caused price to move. Beyond that, if you missed that trade this morning, which obviously I didn't get the video out in time and most of us missed it. I did get a NASDAQ trade on this morning. I was just looking to see how that was doing. But yeah, so anyway, quantifiable reasons for being in a trade. If you missed a trade, don't chase it. There's always another day. And we're coming up on regular trading hours. So everything that happened just now could very easily be reversed out once the regular trading session begins, or markets could pull back on the opening of that regular trading session and then return to it. I mean, often was the word I was looking for, not obviously. Often, price movements around news are transitory, meaning they'll pop up and then they'll come back to where they were prior to news or near where they were prior to the news, and then they'll move again. So, sometimes it just takes off and goes, but often it's transitory. So, don't get too excited over, a couple of points that might have been missed out on. Always wait for that new opportunity and then roll from there. All right, so that's it. I will come back tomorrow. We'll talk about what happened today and how things looked and how things played out. Obviously, what we're watching for is just the straight BTX method at this point to see if we get, obviously a pullback into the direction of the current trend that allows us to enter a trade. All right, have a great day.